So yes, Ajay, thank you for joining us and thank you for giving the Sunday to us. I know it's very difficult to just take out the time on the weekend and to come and join for this thing.
Thank you, Jyoti, for having me invited here. Be it Sunday or Monday. Passion for this subject is I can be anywhere given time.
That's really nice to see that passion which we normally don't see it nowadays. So just let me know about some tips about the NRIs having the property back in India or back in Dubai, here in Dubai, having the property. What are the taxation we need to face according to the FEMA rules?
So I will give you on this two perspective. Okay, let's talk about the India property first. If you are a non-resident Indian and selling a property in India, because the property is situated in India, the income is being received and accrued in India, this is a taxable Indian income for you. Okay. And you have to pay capital gain tax on that. So rules have been drastically changed. Budget 24 was an important year where the entire taxation structure has changed. So earlier rules were used to get the benefit of indexation, and then upon the capital gain which is coming post indexation, you used to pay 20% tax.
Okay.
This concept of indexation has been done away with for NRI. So the government says now, whatever is the difference between sale value and the purchase value, that is your taxable capital gain. On that, you will pay 12.5% tax. Plus, of course, surcharge depending on the sale value and 4% education cess. To give you just an example, if your property sale value is about 2 crore, effective tax rate is 16.25% you have to pay now.
Yeah, okay. And if I have a property in India and I'm receiving it here, let's suppose I'm just renting out that property and I'm receiving the income here, what is the taxation I have to pay?
This is part of your income from house property. Whatever rental receipt you get, this is part of your slab rate income. So India has a progressive slab rate. Till 4 lakh being NRI, you don't pay any taxes. Every 4 lakh, there is a 5% increase in the tax rate. And over and above 24, then it is 30%. So you pay taxes as per the progressive slab.
And if I have the property here and I'm receiving the money here and then I'm transferring the funds back in the India, and what will be the taxation in that?
So if you are a non-resident Indian, any income that you receive or accrue outside India, that is an exempt income for you.
Okay.
So like maybe if you are employed here, you are getting a salary income, you don't pay any taxes on that in India. Yeah, so same is your like rental income. So if you are NRI, you are receiving an income outside India, this is purely exempt income for you, and just mere occasion that you are transferring the income to India.
Yes.
So you have saving, you have surplus funds like you transfer to India. That is a within bank transfer. This is not categorized as an income and you don't pay any taxes on that.
Any taxes, we don't pay it. Okay. And if I'm selling the property, what will be the taxation in that terms?
So again, there are two things now. If you're selling the property in Dubai, you are a non-resident Indian, the capital gain is being received and accrued outside India. This is your purely foreign income. You will not pay any taxes on that.
Yes.
But tomorrow, if you go back to India for good, you become resident and ordinary resident. So India has a concept.
After spending some of the time, right?
Yeah, correct.
Okay.
So basically, primarily you get the R&R status. But after that, when you are a resident and ordinary resident, so his or her global income is part of taxable Indian income. So tomorrow you are a resident, you sell a property in Dubai. Whatever is the capital gain, you will have to pay taxes on that. So Dubai, there is no taxes today.
Yeah.
So you don't pay any taxes here.
Yeah.
But tomorrow, if Dubai comes up with the taxes also, and India will also be taxing the same. So you will get the benefit of the double tax avoidance agreement tomorrow.
But we can sign a double taxations and avoid the taxation.
Primarily, the property income that you have, a capital gain, would be taxable in the country where the property is situated. So the first right is in the country where the property is situated. So tomorrow if Dubai comes up with, say, just to give you a rough example, tomorrow they come up with a 15% tax rate. So you will end up paying capital gain tax over here. And India will give you the credit because India and UAE have a double tax avoidance agreement. So it will never happen that any income is taxed twice.
Ajay, as an NRI tax consultant, how you are suggesting the people when they are selling the property back in the India?
So whenever an individual is selling a property in India, what you have to see is 2-3 concepts. Number one is you have to ascertain what is the period of holding. Because the period of holding will define the tax rate you pay. So if you are holding and selling the asset within 2 years, this is classified as short-term capital gain, and any gain on this is chargeable to tax as per the slab rates. So India has a progressive slab rate. So whatever category you come in, you will pay taxes as per that. However, if you're selling the property after holding it for 2 years, this is classified as long-term capital gain. Government gives you incentive by reducing the tax rate on that. In that scenario, if it is a long-term capital gain, tax rate is 12.5%.
And if it is a short-term rent?
Slab rates. progressive
as per the slab.
as per the slab rate.
So-
So like if it is 25-26 till 4 lakh, you don't pay any taxes. Till
For the non-residents.
for non-residents, yes.
Okay, we don't pay the taxes unless it's crossing the 4 lakh.
Threshold.
When, 400,000, then we have to pay the taxes.
Sorry.
And is it for the rentals and only for the rentals, or it is for the selling the property? It's
So
for
selling
pay-
of the property, short-term capital gain is as per slab rates. Rental is a different house property income. That is a different calculation that we see. Whatever rental income you get, so this is basically आपने कोई रेंट पे दिया हुआ है प्रॉपर्टी, आपको रेंटल इनकम आ रहा है, तो जो भी टोटल रेंट आया है उसमें सबसे पहले आपको रिडक्शन मिलता है म्युनिसिपल टैक्सेस का. So whatever municipal taxes you pay on the actual basis, you get a deduction for that. Then government also gives you an incentive in a way that because देखो आपकी प्रॉपर्टी है, आप उस पर कुछ ना कुछ तो खर्चा करोगे, उसके
Exactly.
रिपेयर एंड मेंटेनेंस, डेंटिंग है, पेंटिंग है. Instead of getting into property to property and transaction to transaction, government says we will give you a flat deduction of 30%.
Okay.
This is a standard deduction you get.
अच्छा.
अब उसके बाद जो नेट आपका रेंटल यील्ड आता है, दैट इज पार्ट ऑफ योर टोटल टैक्सेबल इनकम. अब ये अगर 4 लाख के नीचे और आपकी कोई और इनकम नहीं है, तो देन यू डोंट पे एनी टैक्सेस.
Okay.
बट इफ इट इज अबव द थ्रेशोल्ड लिमिट, दैट अबव बेसिक एग्जेम्पशन लिमिट है, देन यू पे टैक्स एज पर द प्रोग्रेसिव स्लैब रेट्स.
ओके. और जैसे अभी मेरे पास एक प्रॉपर्टी है, मेरे पास 2 प्रॉपर्टी है एंड मैंने दोनों प्रॉपर्टी को रेंट आउट कर दिया है, तो उनकी जो भी होगा, एक रेंटेड है और एक जैसे हमारे यूज के लिए है, तो दोनों प्रॉपर्टी के टैक्सेशन जाएंगे या एक में जिसमें से इनकम आ रही है उसका ही टैक्सेशन?
See, what does government says, एक रूल है, deemed rental income.
ओके.
So government says maximum number of house property, that is residential house in nature, you can have it for your self occupation purpose is maximum 2.
So it is only the house property or any the land is included? or
Only a residential house. In a way, I can explain you, a place where you can live. So any
Okay.
flat, apartment, villa, this is a place where you can live in. So any 2 such properties are allowed for you to have it for self-occupation purpose. Whereas if you're seeing any land, commercial office, shop, this is something where you cannot live. So this is not counted in the deemed let out scenario.
और अगर वो जॉइंट प्रॉपर्टी होती है देन?
So still you have to see who is the title owner. So if you have a property in your name, it is as good as this is your property.
And if it is like a 50-50 ownership, like 50-50 होता है, one is a non-residence, other one is a residence, then how it is counted?
Still, rule is very much the same. There is no differentiation in deemed let out. You be non-resident or resident, rules are exactly the same. You can have 2 property for yourself.
Okay, but no, I'm just counting as a taxation part. So one is a residence of Dubai and one is a residence of India.
Okay.
In that case, अगर मेरे पास कोई rental income आ रही है, how it will be
So
calculated?
if you are 2 owners basically and you are a resident and there is another one who is a non-resident.
Non-resident.
So if you are 2 owners, you will split the rental income. Okay. The taxation is more or like the same. Slab rates are applicable over there. Deductions be same, municipal taxes and 30%. Till here it is exactly the same. But one big difference is here is on the withholding tax. So any rental income that is being paid to a non-resident, there is a withholding tax of 30% plus 4% education cess. 31.2. So any rent being paid to a NRI, there is a withholding tax to be done by the tenant, which is 31.2, which is not the case for the resident. So residents enjoy a better TDS structure in that matter.
Okay, and in that case, it's a term like जहाँ पे हमने rental cover कर दिया. But what about if I'm selling that property which is under the joint name? One owner is a non-residence and the other one is a residence.
Yeah.
In that case, how we are going to calculate as a capital gain?
Okay, so what you have to see is you have to see the respective share. Okay, now if I give you an example, there are 2 brothers selling a property in India. One brother is NRI, one brother is a resident. For brother who is a non-resident, he has to pay capital gain on the difference of the actual purchase value and the sale value.
Okay.
And on that again, he will have to pay 12.5% tax. But for a brother who is a resident of India, he has 2 options now. So this is number 1 option, which is a new thing, that whatever is the difference, you pay 12.5% tax. Or he also can check for a fact that जो old regime था, जहाँ पे indexation का benefit मिलता था, तो जो purchase price है, आप उसको indexation लेके present value पे लेके आओ, and whatever is the difference with the sale value, on that gain you pay 20%. So for a resident, he has both the option, pay 20% with indexation or pay 12.5 without indexation, whichever is beneficial for him.
Okay, so he has 2 options, but we as a non-residents have only one option to follow the new regime.
Correct.
Okay, and what about in just again a scenario? What I'm just asking to you, in your old videos, you have mentioned about the if we are selling the property, we have specific time period for investing it again, that capital gain to reinvest it again. So in that scenario, in this joint property scenario, if I bought the property of 1 crore. Now I'm selling it after 3 or 4 years. I'm selling it for 3 crores.
Yeah.
So I have the capital gain of 2 crores. Now in that case, in the joint property, will it be 1 crore each, or how it will be calculated?
So we have to see the respective share. Okay, so your purchase value is 1 crore.
50%.
Sale value is 3 crore. Total capital gain is 2 crore. But you're two owners now, 50-50. So your share is 1 crore. In case you want to claim for the reinvestment exemption, आपको एक नया घर खरीदना है. You need to
Yes.
buy a new residential house for the capital gain part, not the entire sale value. So if you're selling a house, buying a house, you invest the gain amount into a new property and you can claim for the exemption then. This is governed under section 54.
Okay.
And there are of course certain conditions around it. That new property that you are buying should be delivered to you within 2 years from the date of sale, or it may be like 1 year before the date of sale if you have bought any property. That also you can use it for the exemption claiming purpose. This is when you are buying a house.
Okay.
Maybe if you are buying a land and constructing a house, in that scenario, then the timeline for the completion of the construction is 3 years from the date of sale.
Okay. And if I have some inheritance property under the name of siblings, and we have so many siblings, like 3 or 4 siblings, and with the name of 3 siblings, let's suppose, the property value is 5 crore. Now they have inheritance, like equal portion in between the kids or between the siblings. Now they want to, as a capital gain, what we need to take care on that part.
See, you have to see only your respective share. So
Okay.
if I'm talking about a 5 crore property and there are 2 siblings, your share is restricted to 2.5. So you will concentrate only on your part of share.
Okay.
The taxation is individual thing. There is no concept of joint filing in India.
Okay.
So you will concentrate on your part. Taxability will work out as per your residential
For
status.
individual basis.
For individual basis.
Okay.
Correct.
And the property value will be calculated as per the this previous property value calculated, or just according to the 2001?
So 2001 is an important incidence that you have to see only when the property was bought before 1/4/2001. So like maybe parents bought in 1980, 1990, and this is a way back and property value was nothing that time. So government says in these scenario, what you have to do is whatever is the fair market value of the property as on 1/4/2001, this would be considered as the base purchase price for you for the purpose of calculation of capital gain. एक एग्जांपल दूं, 1980 में हो सकता है 5 लाख रुपए की प्रॉपर्टी आपने खरीदा, योर पेरेंट्स बॉट इट फॉर 5 लाख रुपीस. अब आज उसको आप 3 करोड़ में बेच रहे हो. इट इज नॉट दैट द डिफरेंस ऑफ 5 lakh and 3 crore is your capital gain. In this scenario, you have to see the value of the property as on 1/4/2001, which is circle rate.
Okay.
And for example, it comes to 1 crore. This 1 crore becomes your purchase price. And then 3 crore is the sale value, then 2 crores is your capital gain. On that, you have to pay taxes.
Ajay, nowadays, normally we are receiving the WhatsApp messages related to the one news which is famous around right now, in between the NRIs specifically, that there is no taxation on the mutual funds or any investments into this funds. So what is this exactly into? Do you have any different thoughts?
This has been a very hot topic now. Every day I'm getting so many calls on this. Ajay, what is this new? So honestly, this is something which is not new. This has always been there. So let me detail it out for you. How does this work and why this has gained the momentum now? So India and UAE have a double tax avoidance agreement. So India has like almost 90 plus countries and every country does this contracts. The interpretation over here is there is a line, any income having from a capital gain, which is not from shares. So like for mutual funds for that. The wording, the interpretation is would be taxable in the country where the individual is resident of.
Okay.
So interpretation play is over here that any individual who is an NRI and living in UAE, okay, whatever capital gain he has from the mutual fund would be taxable in the country where he is living, which is UAE. In India, there is no taxes. So you end up paying no taxes on that. And this has been always there for years. But thing is, this was not very clear. This is still today an interpretation based fact. So people, there are some who took the advantage of this interpretation and filed the ITR. So at the first go, income tax officer challenged the same, disallowed the deduction or the exemption claim, and refund जो मिलना था वो मना कर दिया. Being aggrieved, the matter went up to the tribunal. So tribunal is the highest authority to pass on a judgment where it is about income tax.
Okay.
And above that, of course, there is High Court and Supreme Court. But in income tax perspective, tribunal is a biggest authority. Recently, there is an order, and earlier also there was. One was by a tribunal based out of Mumbai and one out of Delhi, which has upholded that whatever the individual is claiming, the SSE, is right as per the interpretation. तो ये मार्च में एक ऑर्डर आया है, ऑनरेबल ट्रिब्यूनल हैज गिवन द जजमेंट which is giving that whatever you are interpreting is right. So now we have a cushion to take this claim. Before that we didn't have any cushion. Now when the ITAT say कि हाँ ये जो भी है सही है, तो we have a merit now. So tomorrow if we are taking the benefit, so the condition is you need to be a tax resident in UAE. So you need to spend more than 180 days in UAE. You need to get the TRC from the UAE government, file for a 10F and then file ITR in India.
Okay. Can you explain about the mutual fund investment with some example if you can explain for our audience?
So mutual fund is basically where your investment happen indirectly into the equity.
Yeah.
This is not a direct equity investment. There are multiple AMCs in India. Through them you invest into the mutual fund. Any capital gain which is arising on a sale of a mutual fund. So capital gain will come only when you sell off the investment. If you are holding, there is no taxes on that. जब भी आप म्यूचुअल फंड बेचते हो उसमें कैपिटल गेन
आएगा एंड
कैपिटल गेन अगर लॉन्ग टर्म कैपिटल गेन है अदरवाइज यू पे 12.5% टैक्स ऑन दैट. In case you don't want to pay this 12.5%, you can plan for the exemption with this TRC mode.
Okay. So we can just plan for just to reclaim this thing.
Correct.
Yes.
अगर उसमें TDS deduct हो गया तो you can apply for a refund. So there are few conditions around which you have to see.
And what are those conditions?
So number one is you need to be a resident in UAE. So you spend more than 180 days in a year over here. That is condition number one. Second, you should be NRI out of India. Third, you have to get the TRC from the UAE government.
So what is TRC exactly, Ajay?
So TRC is nothing but it stands for Tax Residency Certificate. A country will issue you a TRC to state that you have been a resident of this country for the taxation purpose.
Okay. And what is the difference between the 90 days TRC and 180 days TRC?
So there are two types of TRC. One is a 90-day TRC and one is a 180-day TRC, which you have rightly pointed, for the benefit of any international treaty you are doing. So like if you're talking about India and UAE double tax avoidance agreement and benefiting out of the mutual fund exemption, you need to stay in UAE for more than 180 days.
Okay.
So that is a TRC you have to take.
That is for 180 days.
180
and
days.
what is for 90 days?
90 days is only for the domestic tax purpose if you're using.
Okay, only for the domestic purpose, and for the treaty and international purpose, we should have the 180 days TRC.
Criteria.
And what is the validity of that TRC?
So TRC is for year-on-year basis. So every year you want to take the benefit, every year you will have to take the TRC.
And is it like between the financial year or something we have to match according to the India? Or is it just January to December?
Earlier UAE used to give a TRC even to match the India financial year. Now they have discontinued with effect from March this year. UAE will issue you TRC only for the calendar year. So it will be from 1st January to 31st December. However, India follows a different financial year. It is April to March. So it is always a 3-month conflict that will come in. So what we are suggesting to our client is you should continuously take the TRC if you are taking the benefit. So right,
like you are going to suggest, like if I want to take the TRC, would you suggest me after the March, or would you suggest me that between January?
So basically you need to have the TRC before ITR filing. So if you are right now for filing for 24-25, right now what you can get is the TRC for financial year 24 as per the UAE.
Yes.
So take that, file your ITR, and the moment you are eligible to get the TRC for financial year 25, take and keep it.
Okay. So that will that will help me in another file.
So tomorrow if any assessment comes up, you can always say that I am a tax resident in 25 also.
Okay. And to have that TRC certificate, what I need to do exactly?
So you need to be in UAE for more than 180 days. UAE government will issue you. This is an online process. You need to get the immigration report first, okay? Which is your entry and exit report. Just to
we normally get from Amir sir.
Correct. You get that immigration report. You do an online application. There is a step-by-step procedure where you have to upload your passport, put in your details and everything, your employment or your business details. And based on that, you will get the TRC from the UAE government.
Okay. And what are the other conditions I have to fulfill? One is TRC, one is...
So to claim the exemption, number one is TRC. Second, before ITR filing in India, you have to file for a Form 10F to the Income Tax India.
What is 10F form?
10F, basically you declare your residential status and the TRC document is added to that.
That filled by the CAs only.
Yeah, as a consultant, we do in India before your tax filing. And after this, you are good to file your tax return. And then there is a specific provision available where you have to portray that I am a non-resident, I want to take this benefit, I have filed 67.
Okay.
There is a separate section where you have to file your exemption details.
That
to
all the
claim.
consultant do it for us, right? Okay. Thank you so much, Ajay, for answering all my questions and for audience questions. Thank you so much for taking the time out and answering all those questions.
Thank you so much for having me here. It was a good moment that I was interacting you on a topic which is rather the most ignored one for the NRIs.
It's normally the ignored one because being here from 2005, we are ignoring all these things. So thank you for actually giving us those knowledge.
Thank you so much. Thank you.